Welcome back to the channel, Crypto Trend Trader, with a quick update on Bitcoin. Before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Alright, here we have the daily. I'm looking at the Bitstamp chart. I have 3 indicators on the screen right now, all available on TradingView. These 3 indicators used together are designed to essentially eliminate the guesswork, show you what other people are looking at combined on one screen, and then give you the indication one step ahead of the market. I'm going to go over these 3 indicators briefly. You can find more detailed videos on them. First off, we have our moving averages. You'll notice on the daily that we now have our red shortest time frame moving average crossing below our yellow moving average, which is the second time frame. We crossed them positive back here on what was that, the beginning of January. They crossed over January 4th, 5th, around there. We've been in that uptrend the entire time. Now they're crossed back over negative. So we're either in a heavy consolidation or beginning of a long-term downtrend on a daily time frame. We've sold off already to the 50 moving average. That's exponential. We're now touching the 55. These last 3 days, we've put in 3 heavy sell days. Each one like starting and selling lower 3 in a row. That's 3 black crows. That's bad, obviously, and typically leads to continuation. Although we may see some relief at some point in the near future. Looking down here, the next targets are going to be the purple moving average down here, and then the blues. And the blues are going to be the retest of our golden cross that everybody was screaming about. This was our golden cross right here on the lagging moving averages, the green and the blue. This was the golden cross right here on the exponentials, the bright green and the bright blue. We're coming down here. We're almost tagging them. We're so close. If we get down to 86.50, we'll hit both of them. That's our retest. That's a decision point in the market. Are we really going to do this thing or not? Markets are getting crushed. Everything is getting crushed right now. But we're fine because we saw it all coming. Stay focused. Alright, next we have the Jewel Thief. Jewel Thief gives us the hard sell at the absolute top. At the absolute top. Jewel Thief is killing it. Fine-tuned. We got the hard sell through the distribution zone. I don't have to tell you why we didn't take this hard sell either, because if you've been watching the channel, you already know. You could look right at it right now without even knowing what's going on, and you know why these 2 indicators are perfect together, why they were designed to be used together, why these indicators kept you from taking the sell right here and got you in and out on that one. And next, we're going to talk about that. We're going to talk about the TJD, TD, MACD. And when that flipped over blue, we knew we were in a confirmed uptrend. We were riding it. And look, we've been below this average. And when you're below it, it drags it down. And eventually, the slope switches and it turns red. And what is it? We said it ahead of time. We said it's going to turn red. We said we've been below it for days. This push up right here was the final attempt. Liquidity for the whales before the dump, before the capitulation from the descending triangle, before the cross of the moving averages on the daily time frame, confirming the downtrend. We just hit our short-term moving average on the weekly. We should find some kind of bounce, consolidation, support, something here. This was a clear rejection, just like we talked about. Why we were skeptical of this entire move. We got the hard buy at the bottom on the weekly now. Remember, we switched over. We got the hard buy at the bottom. The weekly crossed over here. This is a lagging indicator. It's very difficult to use this on the longer time frames. You have to be careful because it lags so hard. Look, we had the green slope the whole way up. We just said beforehand we were about to lose this blue slope on the weekly time frame. Look at that. Look how long this lasts for. Okay? When we came back up here though, that test, we said if we get rejected right here and we do not get above that, it's going to flip over red, just like what happened on the daily. And look what happened. We got rejected. We're selling off now. If this week closes negative and we get another red histogram wick on the next weekly, we get another red histogram, this is going to flip over red and we're going to get a massive sell-off. Switching back to the daily, look back at that. You remember? Look, we came up here. We lost the slope. We lost that slope and it sold off. And now look what happened as soon as it flipped over red. 3 black crows. Massive sell-off. I was trying to tell you guys that the whales have technical analysis also. The whales know how to use YouTube. You got to be careful. Everything you see, they see. They've got the money. They've got the bots. They've been around in the space. They know about people's feelings, emotions. So be careful. That's why we use technical analysis. Okay? We talked about a black swan event months ago about the stock market and crypto and gold and all these things and how it was going to all come to fruition. Okay? Go back, watch the video. Anyway, here we have it. It's playing out just like we talked about. We could find support at any one of these levels. This could be a good support area, 9111. We could find our support in that 8900 range all the way down to, 8600. I would look for support at 8600 at the lowest, but I think between 86 and 88. This is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research. Trade responsibly. I was talking to you a little bit about phonies and what to be careful of. I want to help you spot one. I'm not going to call anybody out by name. But what I'm going to do is I'm going to show you how to spot one. Okay? You see my trend line? You see how they're drawn right here? This is very important. Oh, sorry. This is very important. Very basic. Okay? Anyone that knows anything about technical analysis knows this basic principle. It's day one stuff. Okay? You learn it in kindergarten of technical analysis. When you're picking a point, you're at the top of a trend, alright? You're going to pick that point as the top. Now you're going to draw a trend line, okay? Our trend line is going from the top right here, alright? It's going down past these tops, alright? That's a trend line. Boom, 1, 2, 3 touches. That's a trend. That's a pattern. We can use that, alright? This one right here, you see that? That was our top right here we started at. So everything we draw from that top is to the right. We only ever draw to the right, okay? This is a book. It's a story, and it tells itself from left to right, okay? So as it travels, you see it. So anything you draw is going to be from left to right. You never draw from right to left, okay? So if you're picking a high and you're going to now create some sort of trend or pattern or consolidation or whatever, a channel, whatever you're trying to do, you're going to pick a point after that high. And now we're going to pick a point. We're going to go from this candle close right here and we're going to create this trend line, okay? And that's going to create descending, broadening wedge. It's getting bigger. It's distribution, okay? It's selling off more every time and it's bouncing up less every time. So price is just slowly consolidating lower, alright? This is bearish, obviously. Now look, I have seen multiple of the top analysts in the crypto space drawing this right here. This channel that we're in. You can't start. You don't start here and then have a high here and then go there. And it's the opposite if you're at the bottom, okay? If you're at the bottom and you're going to pick a point, if you're going to pick this point right here, you start at the bottom and then you draw to the right and you pick lows, okay? So you could go from here and keep going that way. You can't pick this point and use it in this as your lows. No, use to the right of it, okay? It's not how, you don't draw this. This doesn't make any sense, what you're drawing right here. That's day one stuff. If you're doing that, you don't know anything, honestly. You're a phony. You're a fraud. So be careful. If you see people doing that, be careful, because they don't know what they're doing. That's not how you draw trend lines. That's day one stuff. Anyone will tell you that. You need to pick up a book. You shouldn't be selling people glasses and giving them financial advice. Alright, one more. I'm going to give you one more. Alright. This is a newbie mistake. Day one stuff. I mean, amateur stuff. Everybody knows about the RSI, obviously. Relative Strength Index. Basically just shows you, like, are a lot of people buying this asset? Have most people already bought into this asset and there might not be much more fuel for the fire? Vice versa. Has there been an excessive amount of selling? Is there maybe not any more fuel to the downside? So now, could get ready for a bounce or a bottom out? Everybody knows about that. RSI, overbought, oversold, all that good stuff. Stochastics. Okay, everybody's familiar with stochastics. Alright, you're essentially just using, like, two moving averages, and checking out, like, their convergence over time. There's only so much data that can be used and analyzed for any of these indicators, alright? But anyone that's using stochastic RSI has no idea what they're doing. They're essentially using an indicator of an indicator. So you're using a moving average or an average indicator of the RSI. It doesn't even make sense. It's basically a useless indicator. I mean, I'm sure there's someone out there that trades using it, but you know what? They're probably brand new and just got lucky. They've been trading traditional markets for the last 10 years. That's why they've been doing good. Because anybody's been trading the market's been doing good for 10 years. Get out of here with that day one stuff. Alright, that's 2 ways to spot a phony. Alright? And I'm not trying to give anybody flack or anything. I'm trying to help you guys out. Just in case you see the same stuff I'm seeing. Alright? Because you can't pick and choose bottoms and tops and trend lines and where you're going to draw things in and what patterns are, etc., etc. Alright? You gotta do it by the book. Alright? Stop moving your lines and saying you just had to adjust it a bit and we haven't broken out yet. Get out of here. Now look, we could find support right here. We're at a solid area. We could potentially find some support here. We could see a bounce, little consolidation. But again, you really want to catch the knife? Stock markets saw the most violent 2-day sell-off in years. Might be the best time to just kind of sit on the sidelines. I don't know. Do I think it's a good time to open a short? No. You remember when I was telling you up here though? That was probably a good time. Probably up here was a good time. So no, I don't think, my opinion, not financial advice, no, I don't think you should just open a short right now. But again, like we were saying before, in a downtrend, bounces are for selling. So we're going to use any bounces to get out of positions or to open shorts. And then, play it by ear from there. Be very careful in these markets right now. This is a dangerous time. We're seeing a black swan event. And, between the politics, stock markets, everything going on right now. These are dangerous times. At the top of extended uptrends and bubble bursts, you see extreme volatility. So things aren't just going to fall off a cliff. They're going to go up and down with extreme volatility. Alright? Liquidating left and right. The engine's going to be pumping. I'm talking about, we're not used to seeing 5% moves in the stock market and 2,000 point drops.